Hello everyone, welcome to the Ichimoku and Forex Trading TV daily FX market review for the trading day ending April 16th. Well, firstly to the Euro US dollar, and here we've seen a change of trend for the close of yesterday's session. That's the close of Wednesday's trading, and we saw price action rejected from above the 138.32 level, but also rejected from below the 138.10 level. The 138.10 level and below corresponds with that zone of support and resistance that's been highlighted, and now it's holding as support. The top of the area is holding as support. For today's trading, we're actually seeing this new trading day, we're seeing the market testing above the 138.2 level in a bullish manner, and it does suggest that there is potential for the market to go on with the move that we saw yesterday, even though we saw the sellers close with control of yesterday's trading. In terms of the Fibonacci projection, and here we see the change of trend for the trading day that has finished interacting with the 23.6% level and being rejected from there, with the sellers taking control. So that does suggest that there is a possibility that we may not see that trend change to the upside, but in fact a change of trend to the downside. Now, we do require confirmation of that, but we are seeing the buyers at the moment finding some solid upside momentum, even though they haven't tested above the high of the previous day's trading. And in terms of the Fibonacci retracement of the previous downtrend, and price rejection from the 50% level is very important. For the just completed session, we've seen sellers taking control of the market, the buyers being rejected from that 50% level, and at the moment, as this market trades now, we're seeing the high test to that level and some minor rejection taking place. But very important here is the 4-hourly chart, and we can see that for the past consecutive 1, 2, 3, 4, 5 trading periods, the 5 4-hourly trading periods, we've seen the top of the cloud holding as support for the market. Now, the market attempted to rally at the start of the trading session through the first pivot point resistance level, and as this current candle is developing, we've seen price action rejected from the Kijun-sen trading at 138.47, but also supported at the top of the cloud. So close by support and close by resistance for this market. So there is a possibility of this market actually trading higher in line with the change of trend that we saw on the daily charts for yesterday. But really what will be important is whether the market can close in a bullish manner up above the Kijun-sen, which is trading at 138.47. If we see bullish activity up above there, we could quickly see the market trading to the second pivot point resistance level at 138.70. Moving to the US dollar Japanese yen on the daily charts, and here we've seen price action maintaining below the Ichimoku cloud, giving us a bearish market in all three timeframes, by also trading down below the Kijun-sen and the Tenkan-sen. A bullish candle for that trading period that has ended, but rejected from the bottom of the cloud, and with the price rejection there, it does suggest that there's a possibility of the market trading down. At the moment, we have a black body candle in this undeveloped candle, but if the market does come off, potentially strong support at the 101.65 level, but any rally may see even stronger resistance around the top of the cloud, with the Tenkan-sen trading there now and the 102.47 level of resistance close by. And just looking at the 4-hourly chart, and here we've seen price action rejected from within the cloud, and testing down to the first pivot point support level, and price action being rejected from there. That first pivot point level will be very, very strong support, because we also have the Kijun-sen trading there around the 101.85 to 101.87 level. We see the long shadow on the cloud where the market has been trending down in the first time frame, but the sellers have failed to maintain control as they tested down below the Ichimoku cloud. And once again, as this current candle is developing, we are trading around the top of that cloud where we're seeing some resistance, but we are also seeing support around the first pivot point support level. And also on the hourly charts, and here we've seen the market sell off to find support at that first pivot point support level, but as the market's rallied and attempted to trade up toward the middle pivot point level. We've seen the Tenkan-sen, the green line here at 102.04 at the moment, holding as resistance, but at the same time the top of the Ichimoku cloud holding as support. So resolution here will be a solid bullish breakout up above either the Tenkan-sen, the pink line, or the Kijun-sen, the green line, which is at 102.10, or a bearish breakout down below the Ichimoku cloud, the bottom of the cloud, which also coincides with the bottom pivot point level, the first pivot point support level at 101.87. In terms of the Aussie dollar US dollar, and for the previous day's trading, we saw some indecisive candle following a fairly large black body candle, and for the second consecutive trading day the market finding support at the 93.30 level, but also just below the Tenkan-sen. This current candle, as it's developing, is signifying a change of trend with a higher high and a higher low, but we are seeing sellers enter the market, and that's as the market is testing roughly up around the 94-cent level. The market seems to be forming some sort of a pattern. It's a flag type pattern, and here we have the prior trend leading into the pattern and the flag, and generally flag patterns tend to be continuation patterns, so we will be looking for a breakout to the upside, and what we want to see is a close up above the upper barrier of that flag, which at the moment is at that 94-cent level. That would be in line with the market being bullish in all three time frames, trading above the cloud, the Kijun-sen and the Tenkan-sen. One thing to watch here for, however, is that the market is trading a fair way away from the cloud, and it is suggesting that the market is looking a little overextended, so it wouldn't surprise to see the market continue to sell off and potentially down through the 93.30 level down to the bottom barrier of the pattern, so we can test down to lower levels and even possibly over the next day or so down to the 92.78 level for that flag to still be intact. Although the longer that this flag goes on for, then and the bigger it becomes, the more really out of sync it becomes with the prior trend leading into it, and it doesn't really lend itself to being a copybook type flag pattern. But as I've mentioned, in line with the trend being up in all three timeframes, it's more likely that the breakout would be to the upside, but we do require confirmation of that close above that level, and then we'd like to see a bullish close and also potentially some follow through to the upside. And just quickly looking at the Fibonacci retracement of the previous first time frame upswing, and here we've seen price rejection from the 50% level for the past two consecutive trading days that have finished trading. So in line with the rejection from the Tenkan-sen, we have a rejection from the Fibonacci level, and it does suggest that there is a very real possibility of a change of trend, and we are seeing that at the moment with the market making a higher high and a higher low, although we are seeing a black candle body develop, a black body candle, develop at the moment. So what we'd like to see is some decent follow through and the buyers take control of this market as well if we are going to change the trend to the upside. In terms of the hourly chart, however, early in trading we saw the market hovering around the middle pivot point level, breaking out to test almost to the first pivot point resistance level, but being rejected from there with neither side taking control. So considering that we had a breakout on a very indecisive type candle, it didn't suggest that we would see any follow through, and we haven't actually seen that. In fact, we've seen a breakout down below the bottom of the cloud, but no decent follow through at the moment. A candle here for this last hour that has finished trading, that's where we see the sellers moderately in control. Importantly here, however, for the past two candles we have seen the middle pivot point level at 93.62 and the Kijun-sen at 93.64 holding as resistance, and this does suggest that there is a possibility of this market coming off. So important support at the low of the candle that has completed trading at 93.65. If we see bearish activity down below there, we could quickly see the market testing down to the first pivot point support level at 93.37.